Hey everyone, welcome back to Corporate Decoder. Today we're diving into Banner Corporation's latest 10Q filing. It's like peeking under the hood of a financial institution, but don't worry, we'll keep it simple enough so that you can understand it even if you just finished 12th grade. Get ready for some insights, hopefully before you fall asleep. If you find this type of information helpful to understand how businesses work, don't forget to subscribe. You can join the Discord channel in the description down below to further discuss these filings. Let's kick things off with a quick snapshot. As of April, Banner Corporation had about 34.6 million shares of common stock outstanding. This number gives us a sense of the company's size and how ownership is divided. Now let's get into the nitty-gritty of Banner's financial health. To start, we should look at the assets. Total assets decreased a little bit from the end of last year, going from $16 billion down to $17 billion in March. This was mostly because securities and some deposits went down, but there were more loans around that could offset the losses. Loans are at the heart of any bank, and Banner is no exception. Net loans, that is, the money they expect to get back from borrowers after accounting for potential losses, increased slightly to $11.28 billion. Of course, assets are just one side of the story. Liabilities, what the company owes, tell us just as much. Liabilities dipped a bit too, landing at $14.34 billion. Retained earnings is what's left over after everyone gets paid. In Banner's case, it was $772.04 million. These numbers are key because they show how much money the company has to reinvest in itself or distribute to shareholders. Alright, time for the numbers that really matter: earnings per share. Banner reported $1.23 share in earnings for every basic share and $1.13 for every diluted share. Let's get to the numbers that make the company tick. For a bank, that means interest income is how much money they are able to make from loans, securities, and other activities. Interest income was $193.9 million. Of course, the company also needs to spend money. Interest expense is the measurement for that. Total interest expense was $52 all lunch. And with those two numbers, we get net interest income. Net interest income is how much the company makes minus how much it spends. That's roughly $141 for Banner, but not all loans are guaranteed to be repaid. So a bank has to take that into account using a provision for significant losses. Basically what they think they could lose from loans. This ended up being $3.1 million. One quick one is to point out that the net change in valuation of financial instruments carried at fair value ended up costing the company $315,000. Of course, you need workers to be a successful company, but they need to get paid. Salary and employee benefits cost Banner a bit under $65 million. And here's another interesting fact. Salary and employee benefits ate up a sizable $64.9 million, which is one of the biggest costs to account for. Now let's see if there are any court cases that Banner Corp might be involved with. Based on what they are saying, they don't think any legal battles will cause problems for them. Looks like there have been no new or revised measures adopted by the company. This is important to check because if there were, it means that the company wants to try new things. The company has pledged some financial instruments such as state and local governments' public deposits, with a total pledged securities equaling roughly $500 million, SIM 511,551. Banner is also using a grading system to decide who is more risky than others. There's a special mention for risky people, and when it's determined the risk will amount to a loss, there are a few steps to consider. They have 1-9 ranking with 1-5 meaning it's okay, 6 being special mention, watch out. 7 meaning there's a possible loss, 8 means it's extremely likely to have a loss, and 9 means it's basically uncollectible. The amount of the company's goodwill or intangible assets has stayed stable at around $373 million. In general, they say that fair value of Banner Bank exceeded the carrying value. Proceeds from sales of real estate and the sale of other property amounted to $1.5 million. Okay, we reached the end of this 10Q and there is no defaults in senior securities. This means no previous debt obligations are not being paid. To close it out, we have certifications from the top executives. So both the CEO and CFO are claiming the information is completely legit. They are required to do this by law with the Sarbanes-Oxley Act of 2002. Now, zooming out and looking at the full picture, Banner seems to be maintaining a good position right now. They are having a little struggles to increase profit. They seem to have a conservative approach in their business and seem to be operating within their safety guidelines. However, the risk factors that could affect the company are that the company might need to raise prices due to competition. It's difficult to predict a company's future, but with the numbers mentioned, Banner looks decent enough. The share looks fairly priced and is likely to be around the same level for a while, unless something unexpected happens. Alright, that's our breakdown of Banner Corporation's 10Q filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.